Hello, welcome to this ESS BIZTOOLS Advanced Package Overview. I'm Peter Towers, Managing Director of ESS BIZTOOLS. I hope you're having a wonderful day. Today I want to talk to you about the wider range of advisory services that accountants can provide to SMEs, with a particular emphasis on financial and commercial advisory services to assist your clients. The ESS BIZTOOLS package gives you a comprehensive service, including the advisory intro package and the starter package, which has then been rolled into the advanced package that we are going through today. The SME community needs assistance from accountants. It's just not a matter of preparing the annual set of accounts and a tax return and quarterly BAS statements to go to the tax office. I think history's proving that those services are not enough to assist significant numbers of SMEs to survive in business. The failure rate is up for small businesses. The Ombudsman for small businesses indicating there's less small businesses participating in the overall Australian economy. So who can help them? Which group of people are out there that can help SMEs? I can't think of any other group that could impact. Might excuse the noise. We're in Townsville in North Queensland, which we have a major RAF base, basically in the city, and there's extensive exercises taking place at present. So there's a need for far more important information than just the income tax return and the business activity statements. But who's going to prepare it? I can't think of any other logical group of people than accountants or people who try to portray that they're accountants who can offer these services. I think we need to think about what happens to a larger small business, maybe with a turnover of $5 or $6 million. That business might employ a full-time accountant or even a chief financial officer. And that person would then be engaged 38, 40, 45 hours a week in that role. They just don't sit there and prepare profit and loss accounts and balance sheets and information for the income tax return. They look at a vast range of other information. The key performance indicators, the business metrics, but they also are the recipient of numerous questions from the CEO and probably other members of the leadership team. What I used to call, when I was the chief financial officer of a listed public company, the what ifs. Pete, what if we did it this way? What if we changed this to that? What would the effect be? What would the cost be? What would the margin be? What would the profit be? These were continual questions that were coming from the CEO, the sales manager, and the production manager, who were looking at changing production techniques in our company, which was a major meat processing company. Large meatworks, retail butcher shops, small goods factories, cold stores, all being operated as separate business units so that individual profitability reports were available for them each week. So we could quickly highlight any anomalies. If we expected a gross profit percentage of 38% and we only received 23%, there was an inquiry. What went wrong? Sometimes we found it was human error. Unfortunately, a couple of times we found it was human involvement of a dishonest kind. And in other cases, we found that the specialised products had not turned up in time or some other reason, but at least we knew the reason and were able to fix it. Compare that to your SME client, what I've just been talking about for the last couple of minutes. Who does your client take their what-if questions to? And no one will ever convince me that an SME CEO has not got just as many questions as what a public company CEO has. Because the major difference is the CEO of a public company has a whole group of leadership team members. 10, 12, our organisation had 10, and I was one of them, but there were 9 others who would fire questions. And then in the operational field, we had 13 area managers and 13 accountants and 13 small office teams, all preparing information for their business activities. Your SME client doesn't receive any of this type of information. Yet in lots of cases, the businesses that are receiving that information are only a little bit bigger. The same problems exist, I think, in an SME, a smaller one. I think it's our obligation as a profession to try to help them beyond the tax return and the business activity statements, as important as they are. And I've just talked about what's on that slide, so I'm going to move on. Pardon me. So it starts with looking at a range of activities. I think if you're going to supply these services, you first of all need to know the business, your client's business, like the back of your hand, or 1 inch wide and 1 mile deep, not 1 mile wide and 1 inch deep. You need to understand where the potential problem areas are. The alerts for potential fraud or other accounting problems could occur. How are the purchases handled? Who places the purchase order? Who checks the pricing? Who checks the goods when they arrive? All of these things are important. Once you've understand the overall business operation and who does what, who's responsible for what, what's the internal control? Has there been changes in the internal control? You are then able to prepare the business plan. Now, the business plan's like a map for tourists. If you don't know where you're going, how are you going to know when you get there? Important question for a business. But the business plan should not just be prepared by the accountant in isolation. It should be prepared in conjunction with the leadership team. In fact, your role is as the coordinator, the scribe. Perhaps you're going to raise a number of ideas with the team, but you need to let them make the decision, because at the end of the day, it is the leadership team that have to implement the business plan in conjunction with their team members, of course. Implementation is vital. Otherwise, preparing a business plan is nearly a waste of time. But the business plan needs to be a living document, so there needs to be an action plan in it that is revisited at least every month at the leadership team meeting to review what was supposed to be done in that period of time, which normally I would say it's been 3 months in the business plan, but revisited every month to make sure there's commencement started on a project that has to be completed within the next 2 to 3 months. And once the business plan's finished, it is then possible to prepare the financial interpretation of the business plan, the predictive accounting reports, which are the budgets, the key drivers, and the key drivers comprise key information that otherwise can get hidden in the budgetary forecast, in either within the budgets or within the cash flow forecast. They're things like inventory of raw materials, so that the level of inventory of raw materials is able to be analysed very carefully. You should be able to have a printout of it. The creditors position, and in some instances you may have prompt creditors as well as longer term creditors, because some of your clients may have 7-day payment arrangements until they've proved their worth with their supplier. The other creditors that are granting your client 30 days could be treated separately, because the creditors' days outstanding and the debtors' days outstanding are very important KPIs and need to be readily able to be ascertained weekly, monthly. And there's other components of the sub-accounts also for the key drivers: capital expenditure, research and development projects, export market development activities. Hopefully some of that might be able to be claimed back as an export market development grant if the entity's turnover is under $20 million per annum. So the predictive accounting reports are very important. And at the end of this process, you will have a projected balance sheet. Probably in 3 years' time for most SMEs. Going further is probably a bit dangerous. What's the business going to look like in 3 years? Sit down and act as the storyteller. Talk to your clients about it. Get them excited. This is what your business is projected to look like, as long as we can achieve these milestones, and list the milestones out so they clearly understand what's been embedded into their business plan and what it now looks like in fiscal terms in the cash flow forecast. But then one of your really important roles then is to sit back and analyze this and say, okay, what would happen if there was a problem in Europe? There's enough problems in Europe and the Middle East at present, isn't there? But let's say it escalates. You've got to play the devil's advocate so that you are prepared. So the company's already got a holding of inventory of raw materials of, say, $600,000 worth. And that might be based on holding 2 months stock. But if the opinion is that, geez, things are going to get worse in the Middle East and Europe, and that might mean that every shipment we get has got to come by the Cape of Good Hope, and that's slowing the whole process down, we probably should be holding 3 months supply of raw materials if we're going to keep up our production. And that would seem to me to be, on the figures we've got, that's an extra $300,000 at least. And what else is likely to suffer? How are the debtors' days outstanding going? Is there an edging out of them as businesses are finding they're going tougher and tougher? So what's all this going to do to the cash flow forecast? Now, these are the sort of analysis that I think you should be doing 3-6 months in advance, so you can look at it and then start talking to your client and to the leadership team and saying, if these tendencies continue, this is going to be the position. We're not going to have enough money. So we should start thinking about it now and planning. That's why we do these budgets and business plans, to understand the future. And you as an accountant are far more important to your client in helping them navigate the future than being an historian of past events, which is really the taxation return role. So be the navigator to show your client through the confusion of what might happen. And raise with your client, well, could we go to the bank and try to borrow some more money? And the answer might be no. We've got no more security. They want more security. They, in fact, would like us to reduce our dependency on them. You could then raise with your client, well, what about capital raising? Now, even though capital raising has been available for Australian small businesses under Section 708 and its similar sections in the State Acts for nearly 40 years, there's still ignorance of how it works. And it's not the easiest section to work because you can only get investment from 20 investors up to a maximum of $2 million. It's not like you can go out and get a couple of hundred people to come in. And under the general law, a private company can't go to the public in any case, but they can through two new mechanisms that were introduced about 8 years ago by the Malcolm Turnbull Liberal National Party government. And Mr. Turnbull did understand the frustration, the difficulties, the challenges that SMEs have in raising funding for their businesses. So he was the Prime Minister that ensured that crowdsource funding, equity raising, and early stage innovation company capital raising were introduced. So we have those two sections. Crowdsource funding, equity raising is available for a company with an international turnover of less than 25 million Australian dollars. Gross value of assets worldwide, less than 25 million Australian dollars. Not listed on a stock exchange anywhere. Is that where your client sits? You could look at crowdsource funding, equity raising, and within the advanced package, we got the full system to help you be able to be the key advisor to your client so you can guide them through that process. But if your client happens to be a far smaller business, under 3 years of age, it's been involved in research and development activities, has got some great ideas where they're wanting to go, they could be able to be deemed to be a early stage innovation company. Now, the big opportunity with an early stage innovation company is that there is an incentive provided by the Australian government through the tax office of all people. I think it's wonderful. Through the tax office, there's an incentive for those investors as part of the accreditation process that the company has qualified as an early stage innovation company. Because those investors get 20% of their investment up to a maximum of $200,000 for a sophisticated investor, 20% up to $200,000 for a sophisticated investor, and up to $10,000 for a retail investor. But if they hold those shares for longer than 12 months and less than 10 years, they pay no capital gains tax. When those shares that were issued as part of this accreditation process are sold, no capital gains tax on those shares. So that's a great incentive, isn't it? Yet most people don't seem to know much about it. On my reckoning, the company can still only raise a maximum of $2 million and use the 20 shareholders. So Section 708 is the section that's used, but it's this process of the reward that the investors get that's very important. So that's part of the forward planning that I just wanted to talk to you about. Do you do this with your clients at present? Because if you were an employed accountant in the organisation, you'd be doing this very regularly. This overall forward planning, what's it going to look like? In my role as a CFO in a public company, I had that many different plans. We'd start the financial year with the number of the 24/25, number 1, number 2, number 3, number 4. There'd be different plans getting prepared to take into account different eventualities, how we were going to operate our businesses. Your SME clients got the same type of problems. And I'm sure has got the same questions running through his or her head. But they don't know who to ask. They think that all you're doing is tax returns. But we need to stress to our clients that the accountants in public practice can deliver financial and commercial advice. And that's what this all falls under. It's financial and it's commercial. They need assistance in these areas. This is why the failure rate's going up. And with today's technology and today's software and communications, there's no reason we can't deliver those services to them. So this is what we call the 52-week business improvement system. And then what flows on from those three key initial comments that I was making. The due diligence analysis, so you do know your client's affairs, 1 inch wide but a mile deep. The business plan that the whole leadership team has participated in. The predictive accounting reports, the financial interpretation of the business plan, but a very important document and a very important control document, because it really enables you to be the future navigator. The CEO is running the business. He or she is the ship's captain. But your role, I firmly believe, is to act as the navigator, to guide your client through all these problems. And then we get back to what else forms part of the 52-week business improvement system. Daily reports, very important. 50 years ago, when I read and talk to people and read historical business articles, common practice, everyone had a daily report. It seems to have gone out of fashion because we're now using computers. Computers don't do everything. And really all it is a summary of key position. The bank balance, the debtors balance, the creditors balance, what happened yesterday, sales, gross profit rate, number of customers, average sale, or similar information. What are the major bills that we've got to get paid this week? What's the debtors days outstanding figure? Those sort of key statistics that can be distributed to the leadership team so that they understand they're getting feedback on this very important information. The weekly performance reports and profitability reports. The bigger end of town prepare these sorts of documents. In ESS BIZTOOLS, we've built templates of those reports into the system. There's no reason that SMEs should not be undertaking similar processes. And why do we do it? Well, we do it so we can immediately find if there were any problems. Every business operator has an expectation of what's going to happen next week, or they should have. And they will have if they've got your guidance there, because they've got someone who can answer the what ifs. So if at the end of the week, the team are able to assemble a report, probably Monday afternoon or Tuesday, which should be the time, that enables the owner, CEO, and whoever's directly responsible for the individual operation, it might be the owner and the CEO, it might not, to sit down and analyze what happened. And you've got key metrics like how many customers, average sale, gross profit percentage, labor to turnover, all of that. And at the end of it, based on some estimates, but a lot of the costs are known, obviously the income figures should be known, we've got a result and key data. So gross profit percentage was expected to be 36%, and it's come in at 24%. That's a 12% variation. It's enormous. Why? What caused it? There needs to be a review. You might find that the stock take was just guessed. No one sat down and did it properly. And that should be a reprimand, but at least you know that is probably the reason. We'll see how we go next in the current week. It might be that some special goods that have been purchased that have been factored into the overall planning of a 36% GP percentage hadn't turned up because of freight difficulties. Okay, well, you factor that in. Well, that was the reason. They're now here, so hopefully this current week's result will be more appropriate. Or you might find that there's been some fraud, or you might find that cash registers weren't read right. There can be a number of reasons, but there's very strong internal control reasons why you're doing this, because if there's a problem, most people in that immediate organization know there's a problem because you'll be there or some of your team will be there doing, in effect, an audit. What went wrong? That message gets out to the people working there. So if anyone is inclined to have sticky fingers, they'll know that there's an immediate reaction from the organization. And obviously, if there's something found that the system was wrong or a cost hadn't been incorporated into the calculations or whatever, a correction can then be made so that hopefully that's the end of that problem. It got sorted out within 2 to 3 days, so it gets reflected as a correction somewhere halfway through the following week. So in the next week, 2 weeks after, everything should be running very smoothly. What happens at present when a client has that sort of problem? Do they even know that they never got 36%, they only got 24%? Do they even know that someone did have some sticky fingers? Do they get that information, or do they just keep on trading throughout the year? And sometime, maybe 4, 5, 6, 8 months after the end of the financial year, their tax accountant sits down and presents the annual accounts and said, oh, gee, your gross profit dropped a bit this year. We thought it'd be up around 35% for the year, 36, but well, that's what you told us you thought it was going to be, but it's only worked out at 27%. It's too late then to go back and try to work out what went wrong. Number one, no one remembers. Sometimes it's difficult for people to even remember what happened yesterday, let alone 14 months, 15 months ago. But you've got the opportunity to help your client correct that problem. This is accounting services at the highest possible level. And in all honesty, I really believe these are the services that our SME clients require. Now, it's going to cost them more, but the cost should be more than covered by improved business performance. You then get the monthly financial accounts for each business operation. You've got a budget, so you've got a budget comparison report. The monthly financials should then be analysed on the cash flow and the key performance indicators, looking at things like debtors days outstanding, looking at what's the cash flow telling us is now going to be the position of 6, 12 months' time, what I was talking about a little bit earlier. Are there some clouds forming on the horizon? Are there some warning signs emerging? Should you be saying to the CEO or the owner of the business, gee, you might have to have some special promotions to try to get rid of some of this stock that's building up? It mightn't be possible to hang on to Christmas. All of these questions can be raised. Or you might say to the CEO, owner of the business, can you negotiate better terms with your suppliers? Instead of paying them 3 weeks after the end of December, after Christmas trade, could we have it deferred into March or April? That's the pre-planning that can be done. It's a bit late thinking about that in the middle of January when you've got to make those payments and you're saying, gee, we're going to be overdrawn. And a monthly financial report should be prepared as if you're reporting to a board of directors of a public company, whereby you would go through and discuss these issues with them. So SMEs are looking for your advice on these areas. You're the accountants, but we've got to be more forthright about it. We've got to be more upfront about it. We've got to be enthusiastic about delivering these services. And I think once you start, your team will be very enthusiastic, because this is different and interesting and challenging work. I know the tax return's still got to get prepared, but with the improved technology that the tax commissioner, or the recently retired tax commissioner, was talking about in 2022, some of that work's going to be reducing in your office in any case. This is an opportunity to keep your talent really engaged and give them some enthusiasm in their work, and you'll have no trouble with talent retention or attraction. So there's standard papers also included in the advanced package. We've got a training material to assist your firm to get ready. There's 13 modules. The SME needs analysis is a vital document because it contains a whole range of discussion points with your clients. Because part of the challenge for accountants is convincing your client that you know a lot more about business than just the tax side of it. They think that's all you understand. Not all of you, of course. Some of you have done a great job in promoting that you can offer a broader range of services. But most of our colleagues have not done that. You get 10 training sessions per annum. We produce them by video. We have all of our subscribers invited to attend. So you get the benefit of hearing questions being asked by other firms. And you get the recording. You receive the Business Plus newsletter each month. It contains articles on business matters written for a whole group of SMEs. So there's different articles, of course. There's 4 to 6 of them in each edition. There's mentoring and coaching modules. You've got 12 of them that you can talk to and use with your clients. You've got 36 seminars pre-prepared. All you got to do is put your name on the top, do a bit of practice, do a few practice runs on using Zoom, and away you go. And you've got 580 papers in the library covering 68 categories that you can badge and send to your clients. So you could send an email to your client. Hi, John, I talked to you the other day about Tradies charge out rate calculator that we have, which will help you to set charge rates based on the productivity of your team, the costs of your team, the labor on costs, and the individual productivity that you expect to, so that you can generate your targeted profit that you told me you'd like to achieve. Here's an article that we have in our system on how this process works. I thought you might like to have a look at it. And if you're interested, how about we have a cup of tea or coffee, or perhaps something a wee bit stronger next week? That's the way you use the ESS BIZTOOLS material to create some interest with clients. Or it might have been another client where we've looked at the cash flow forecast going forward, and you're saying, gee, there's a problem in about 7 months' time. And what are we going to do about it? Well, you need to raise it with your client. Don't wait until half a month before the 7 months arrives. Talk to them now. And you could raise with them. Or you could look at trying to raise some capital from the public. Now, sometimes you'll get a reaction. Don't want to do that. But you've got the material within ESS BIZTOOLS that you can use to show your client how the process works. After all of our major companies started as small companies at one stage, and they grew. And they grew because they were going to friends, relatives, and then the public at large, and offering them some shares in their business in exchange for cash. And that cash brought an obligation to run a good business, hopefully to trade at a profit, hopefully to be able to declare a dividend each year and pay that money to your shareholders. But of course, also there's no interest on that money, and there's no requirement to repay it. You need to sit down and talk to your clients about that. And the vast majority, in fact, I've never met anyone who had invested in a private company that did so with a motivation that they wanted to run the business. I know that's a bit of a fear that a lot of SME operators have, but I think it's an unfounded fear. And you need to be able to, first of all, convince yourself, I know, but if you have the same view, convince your client along those lines. There's business health checks and business metrics for 5 different businesses. Business planning. We've already talked about business planning. It's a huge subject. We've got 30-odd questionnaires in the system relating to all components, marketing, sales, team development, directors' duties, all part of what's in business planning. The cash flow management, I've talked already at length about that, so there's not much more I can say about that at this stage. It's very important. It's all in the package. The Chief Financial Officer services, which really encompasses the business planning and the cash flow forecasting role. The Chief Financial Officer sits over all of these. How do you implement that job? We have a whole series of material to guide you through that process. We've talked about crowdsourced funding, equity raising. We've got a complete product package that shows you from the very beginning right through to the end. Who's eligible, who's not eligible, what's a sophisticated investor, what's a retail investor, because there is that differentiation in crowdsourced funding, equity raising also, because a retail investor can only invest a maximum of $10,000 in a 12-month period in a crowdsourced funding, equity raising company. Early stage innovation company. I've talked about the incentives the federal government offered in the Liberal National Party's amendments or new legislation introduced 8 years ago by Malcolm Turnbull. That legislation's still there. Not enough people know about it. The Personal Property Securities Register. An absolute disaster when that legislation was introduced. It was then changed after review, identified about 340 recommendations for changes. Pardon me. It's there. You should be aware of it and your clients should be aware of it. Research and development. I think I've briefly mentioned research and development. This is a huge area of opportunity for SMEs. Thousands of SMEs undertake research and development each year. I've had an accountant say to me, "Oh, I can't help people with that, Peter. Why not?" One of them said to me, "Oh, well, we only advise on taxation." I said, "I've got a surprise for you. The research and development legislation's all embedded within the Tax Act." Ah, was the response. The other comment was, "Oh, I'm not a scientist or an engineer." I said, "Why do you need to be a scientist or an engineer?" "Oh, to give advice on research and development." I said, "Nothing could be further from the truth." In fact, if you want to compare what I think your role as an accountant is to other professional roles, I think it's as an internal auditor for research and development. We have implemented in our system the documentation for every aspect of research and development. We've got 46 separate forms. Now, you won't use 46 for one client. In fact, I think you could lodge 10 clients in a year on research and development and not use the full quota of 46 forms. But they're there just in case. But it's your client's responsibility to undertake the initial research. It's your client's responsibility to prepare the experimental reports as to what happened. And it's your role, as I see it, to assemble all that, to go through the checklist, a bit like an internal auditor does, and make sure all the documents are there in the submission of the report that has to go to Oz Industry and ultimately to the tax office. And there's a summary of what's in the advanced package for research and development. Very comprehensive. And we've got strategic business mentoring. This is where you might be acting as an executive director. The client's starting to get bigger and they're putting together a board, and your clients approached you to say, "I really need someone on this board that really understands our business. I want you to come on the board. I want you to have some authority. So I want to team you as an executive director." So someone rang me and said, "I've got a client wants me to be an executive director. What's that mean?" explained, and then we wrote some material on it so that everyone could analyze it and become one if you wish. Also included is material that's in the starter or advisory intro package, grant update each week. Thousands of grants in Australia. You're aware of them. The tradie charge-out rate calculator that I referred to earlier. It's Running Mate, the professional service firm charge-out rate calculator. Very similar, but you can help a whole range of SMEs, tradies, and professional service firms to get their charge-out rates done properly, to set themselves up that whatever their profit target is, 100,000, 200,000, and so on, that based on their productivity and their expenses, they should earn that profitability. And you would then monitor it each month. Setting retail price calculations. Have you ever helped a retailer go through and try to plan their business? It's mind-boggling because they've got stock that comes in under 4 main categories, and within them there's all sorts of subcategories. But you've got the stars, which is generally high volume lines and high markups. That's what every retailer dreams of, just selling those products. But in most businesses, you can't do that. There's not enough of them. There are competitors that the customer can go to. Then you've got the cash cows, which are also high volume, but low markups. You need them because people come to your store or to your business wanting to buy those, which might be newspapers, bread, milk. One of the suggestions that you could be making to your client based on the material we have in our system for you to use is making sure they space those items around their store and put their bread, a high volume but a very low markup, next to their prized ham off the bone that everyone can smell in the shop. It's beautiful. But put it alongside, because really what you're wanting your customers to do is to buy the ham on the bone. That's where the profit markup's big. And they'll do that. Oh, they're going to get their bread. Oh, what's that wonderful smell? It's the ham on the bone, or it might be a beautiful pre-cooking that's occurred this morning. I get frustrated when I go into some retail stores and see items that I'm convinced are cash cows sitting next to the cash register at the front. I think it's for the ease of the person running the store, instead of spreading them around the shop. So some customers just come in and buy the bread, the milk, and the newspaper, and out they go. There's not a star item amongst them. Whereas if they spread the cash cow items around the store and put a star item in close proximity, you might find they'd sell far more of their star products. Data systems manual, selling them. These are all part of the package. So do you have any questions? If so, can you please send me an email, peter@essbiztools.com.au, or telephone 0747241118. We'd love to hear from you. Now, your investment. You can get everything that I've overviewed today for a 50% discount as part of our Christmas promotion. So you have access to it 24/7. You have a password, you can just click on and away you go. You can start using it tomorrow. That's going to cost $2,970, including GST. Or you can subscribe for a 3-month package if you like. If you want to see how it goes, you want to see what our training's like, you want to see how our website works with you, that's all right. I'm very confident that after 3 months, you'll want to renew your subscription for the remainder of the 9 months. So either subscription, the offer's open to the 23rd of December. We'll be working on the 24th of December to process any late registrations. So if you want to look at the system over the Christmas New Year break, you can. So are you ready to implement advisory services for your client? Have I created some interest? Please go to www.essbiztools.com.au, click on packages and pricing and click on advanced package. And then you elect whether you're paying for the 12 months 50% discount package, or you want to take the 3-month special package offer, which is also at a substantial discount. Just click on which one and complete the subscription and your payment. And we will be in contact with you the next day to get you started. And we will be setting up your first training session in late January. We look forward to welcoming you to the ESS BizTools community. Stay safe. Have a great day. Thank you for participating in this webinar. And I look forward to hearing from you. And Merry Christmas and a prosperous 2025 for your firm and your clients. Thank you. Goodbye.